Guys, we just gonna continue doing this. Honestly, I don't know. I don't think there is anybody coming to boost my channel, but at the same time, why not? Why not? Why not? We're just gonna keep going. You know what I mean? And the market is so crazy, man. It's not giving us any stop. It's not gonna stop. And because of that, our channel won't stop going down either. I mean, you can see it technically. You can see it. This channel got no hope. But we will not stop. Like I said, we will not stop. We shall not stop at all cost. Shall not stop. Every day, 1 hour, 2 hours, whatever it takes, we're just gonna come here and live stream. Let's hope it works one day for us. For now, it's working against us really badly. Not going to underestimate the pain of trying to win and not winning. Not going to lie. Not going to lie, but it's a process I guess we have to go through every day. Even TikTok isn't any better, honestly. Even TikTok isn't. I don't think I went live on this one on my TikTok this morning, so which is gonna have a little bit of what is wrong with my computer? I know when we look at the markets, we think the world is coming to an end, but trust me, there are those who want this to happen because they want to buy bigger positions, regardless of how we feel. They don't really care. How is this even possible? Anyways, what I'm trying to do isn't gonna work for me. There we go. There we go. Tap the screen, guys, if you're here. Appreciate you guys for being here. So do tap the screen if you're here. That will help me so much. Sorry, I had to do a few things here. Okay, so well, the market isn't gonna do any favors for us. It went down crazy today. Last 24 hours, Bitcoin is almost 12.5% down. Ethereum is like 3% down. XRP and everything else is just having fun, okay? Nothing is going up except a few useless coins here and there that are trying to rebound. Remember when random crypto just goes up, that means they just want the liquidity. They're grabbing the liquidity from somewhere else. And that's basically what is happening. All right, so I've seen a couple articles here that could be interesting. Elon Musk trolls Bezos again, space, copied EVs, copied an AI. Elon Musk poked fun at Jeff Bezos after news broke out that Bezos is a co-leading an AI startup called Project Prometheus. Prometheus. Huh. So this is crazy because if looks like everything Elon is doing, Bezos is also chasing. So Bezos, I think, is going to be the new CEO of his company, Amazon, and Amazon currently is also joining the AI stuff. It was also in the space already, and it looks like it's going after everything Elon Musk does. Who is going who after who? I don't know, but we will see the fight. Okay. Prometheus has raised $6.2 billion dollars and focuses on advancing AI for engineering, aerospace and manufacturing, and physical economy. Remember, this AI sector is one area where Bezos is also betting on it because, hey, Amazon can benefit a lot from advanced AI stuff. So if he needs to fire basically everyone if he could and keep that money for himself. And one way he could do that is work on AI. Either he has to create his own or he has to buy from Elon Musk. One of the two. And right now it looks like he's betting on by creating his own stuff. So Elon Musk and Jeff Bezos have spent years of circling the same industry, space, EVs, and robotics, and now their rivalries is spilling into a frontier of AI. After news broke out that Bezos is returning to hands-on leadership as CEO, CEO, whatever that is, of a new AI startup called Project Prometheus. Elon Musk jumped and at the chance to poke fun with a post highlighted Bezos' new role. Musk replied, haha, no way, a classic a light of sarcasm jab aimed at long-running Bezos follows Elon Musk narrative. So this is fun. Those two men just, and that is the nature of business. Is like they're trying to take this business away from each other. You know what I mean? Business returned to the front line with Project Prometheus. What a name! I can't even, who can say this name? Anyways, why did you choose the name? Prometheus marks Bezos' first time back in an operational role since stepping back from Amazon in 2021. The startup has already raised a staggering $6.2 billion dollars, with Bezos sharing the CEO position alongside Vic Bajaj, what a name, a veteran of Google's life science division and co-founder of Verify and Forestine Labs, unknown unlike consumer-focused chatbots companies. Prometheus, whatever the name is targeting AI for the physical economy, aiming to build advanced models for engineering, aerospace, automotive design, computer hardware, and large-scale industry workflows. The company has quietly assembled nearly 100 researchers, including top talent pulling from Meta, OpenAI, Google DeepMind. Early comparisons point out to a direction similar to periodic labs. I don't know which one is that, which uses simulation driven AI to accelerate scientific and industry R&Ds. Okay, news. Jeff Bezos has created a new AI startup where he will be co-CEO. Who is he co-CEO with? It's called Project Prometheus and has raised $6.2 billion in funding. Some from Bezos himself. The startup is going to build AI products for engineering and manufacturing in fields like computers, aerospace, and automobile. The company already has almost 100 staff, including researchers from Meta, OpenAI, and Google DeepMind. So basically, he's taking the talent away from these other companies. Elon versus Bezos, a rivalry with a familiar pattern. And remember, uh, technically, um, he owns what is the other platform gamers use? He also owns that. So he's in the social media. He is in the obviously Amazon and everything. He's just a now AI. So that means he's actively rivalry with Meta. Okay, these two won't get tired from each other. Like at the moment, Bezos stepped into the high-level AI development, a comparison to Elon Musk's Grok and XAI, were basically inevitable. From private rockets to electric cars to humanoid robotics and to tech titans often end up competing in the same arenas, even when they claim otherwise. Elon Musk's latest jet plays into that public storyline, positioning Bezos' new AI. Thank you so much. Thank you, Dyson Olalamatsinit. Calculated BRDs. Elon Musk knows exactly how to steer the conversation. That what this means for the future AI, regardless of trolling, Bezos entering into the frontier model race brings another a heavyweight into one of the fastest moving sectors on the planet. The Prometheus, whatever that is, focuses on applied industry AI, not mainstream chatbots. Hmm. Yeah, so basically he's investing what he needs, and what he needs is to replace his employees with robotics. Thank you, Dyson. And basically that's where he's investing into. The company could carve out a completely different lane, one that serves scientific robotics, outer space, and engineering ecosystem. So basically, he's not taking the same route, but he's taking the business from Elon Musk at the same time. So it's interesting. Thank you, Dyson. Thank you, Al Matanit. Let's see what else. What else? Anything interesting? Everything you need to know about what's inside the market structure. Let's read. This was 20. This is the 17th. This is today. So let's see what they talk about. Everything you need to know about what's inside the crypto market structure bill. The Senate Agriculture Committee released a draft bill outlining how digital commodities may be regulated under the CFTC. Many key sections remain bracketed, showing bipartisan negotiations still underway. The legislative timeline likely pushing a final vote into 2026, though industry leaders see this draft as meaningful progress. Thank you, Olal. Thank you, Matson. Shukran. The Senate Agriculture Committee has released its own discussion draft of a sweeping crypto market structure bill, laying out how digital commodities may be regulated, on how much authority the Commodity Future Trading Commission, or CFTC, could receive. While the bill is still early and full of bracket section awaiting bipartisan agreement, it released signals that Congress is actively working towards an unified regulatory framework, even as time runs thin in 2025. Coinbase CEO Brian Armstrong says that Bitcoin and crypto market structure bill is on track to pass before Thanksgiving. What the draft bill tries to establish, the proposed text attempts to define a digital commodities and position the CFTC as the primary overseer of the spot crypto market. It also outlines how Congress envisions two agency expanding role through many areas within open for negotiations. These unsolved details include foundational definitions, conflict of interest provisions, and rule-making guidance that could significantly shape how the crypto landscape is governed. The committee chairman, John Bozeman, I do not like that guy, emphasized that expanding CFTC oversight must be paired with liquid resources, tools, and personnel to prevent regulatory gaps. Meanwhile, Senator Cory Booker, that's another guy, evil guy, called the draft only a first step, highlighted concerns about corruption risk. Thank you, Aldaisen Martin. Thank you, Martin. A first step highlighted concerns about corruption risk, regulatory arbitrage, and whether the CFTC has enough bipartisan commissioners to operate effectively. Some provisions specifically state that the CFTC must have at least two commissioners from the minority party before implementing rules, but those sections remain bracketed and unfinished. Basically, they didn't agree on few places, but most of the areas they kind of agree. Industry response shows the clear support. Despite the uncertainty, the crypto industry largely welcomed the draft. Blockchain Associate CEO Summer Messenger, or that guy's name is, call it another important step, while DeFi education funds Alameda, oh no, Amanda, is it Amanda Terminelli? Say it was encouraging to see a community making real progress. The Crypto Council for Innovation described the draft as meaningful, positive progress towards comprehensive U.S. digital commodity market rules. Matanola Dyson, thank you. The biggest challenge now is time. Congress has only a handful of working weeks left in December, making it unlikely that full hearing markups and votes can happen before the year ends. Policy experts expect serious floor considerations to begin in 2026 instead, especially since the bill must be reconciled with the Senate Banking Committee. Yeah, so it's a work in progress. It's a work in progress, but okay, US moves closer joining global crypto result pact. It is a work in progress. What other news do we have? I like to read these news because it just gives you an idea of what's going on. Thank you, Dyson. I sent it. Oh, it's got that for خير الله كسيه أدنى وقرادي. You have done too much. Strategy steps up. Okay, so this is this things like anytime these guys buy Bitcoin, the market just tanks. It's like somebody wants Michael Saylor to fail. That is the crazy thing, is like somebody wants this guy to fail. It's like he buys, somebody dumps the market. After weeks of reporting Bitcoin purchases hovering around 400 to 500 BTC, Michael Saylor's company announced massive crypto investment on Monday. The company behind the largest Bitcoin treasury announced it has returned to buying large amount of cryptocurrency, allowing a $835 million purchase in Monday filing with the U.S. Security and Exchange Commission. Michael Saylor's strategy reported that acquiring 8,178 Bitcoin for amount of $835 million to purchase represents a significant increase compared to the company's BTC investment in October and early in November, which it reported to be about 500 to 800. So basically, from buying hundreds to buying upper thousands now. That is huge buy, but it did not change the price. I mean, the acquisition came amid significant volatility in the Bitcoin, according to the data from Nansen. BTC price fell by 11% in the previous 7 days, reaching 94,000. Now it's even lower than 94,000 at this publication. I mean, right now it's way lower. It's way lower. Strategy remains the company with the most extensive Bitcoin treasury at 649,000, almost 650,000, following its initial strategy of constantly buying the cryptocurrency, which began in August 2020. Bitmain Immersion's technologies hold the most Ether, and Upward Industries has the biggest position on Solana. So basically, three different ETFs are holding huge amount of the, what do you call the most blue chip um, cryptos. Um, so obviously Michael Saylor, nobody can beat that guy. It's got almost his closing 650,000 Bitcoin. And then we have Bitmain with the guy who is hyping Ethereum. I don't know how much, but he's holding a lot of Ethereum. And then you have Forward Industries, which is also putting Solana in the spotlight. So let's see which one wins. I hope they both win, but you can see the sell pressure is coming because either they're trying to grab as many of these coins as possible in a cheaper price, so they're behind, or their friends are behind the sell pressure, or someone wants them to, you know, to force sell. Like when you are forced sell, you're gonna sell regardless of whether you're in loss or in profit. You just have to sell it. And either it's that way, somebody's trying to margin call them, which they're not merging, they're just buying it. They hold in the physical Ethereum, and not physical, but whatever. You know what I mean? Or it's them that are actually behind this, and he wants to get Ethereum around 2-3 thousands or under, and Bitcoin around 80,000, where it's 90,000 or 88 to 85,000, wherever it goes. Strategy chair to debate Goldberg. Okay, over the weekends, I think we read something similar to this last night, so we're not gonna go through it. So basically, yeah, the guy added like 8,000 Bitcoin just today, and people are crying that this thing is gonna go to zero. Why would he buy 8,000, spend like over 80 something $1 million? If he knows this is going to zero, it's like it doesn't make any sense. Okay, so VanEck launches Solana ETF with zero sponsor fees. VanEck has officially launched its Solana ETF VSOL on Nasdaq as of November 17, 2025, delivering new investment opportunities with zero sponsor fees initially. The VSOL's launch offers initiative access to Solana, potentially influencing market strategies by integrating staking rewards, aiming broader market volatility and competitive asset management landscape. So basically, the bill that was passed allows these companies, especially Ethereum and Sol ETFs, to stake their holdings. So when they get the rewards, then they can pass that to their individual holders. And by just holding Solana on VSOL, which is VanEck Sol, or holding it through Bitmine, which holds the largest Ethereum, or maybe I don't know anything about Michael Saylor because he can offer, unless he offers dividends, he can offer because Ethereum has a different, I mean, Bitcoin has a different structure. But basically, they were allowed to earn what do you call staking rewards and pass that staking rewards as a form of, I believe they kind of call it dividends to their holders. So VanEck Solana ETF introduced zero fees staking. VanEck Sol ETF or VSOL launched this week, offering zero sponsor fees for initial 1 billion AUM and integrates staking rewards. VanEck, and that's the main point where everybody, hey, you just buy it, hold it, and then earn your rewards. Staking rewards. That's where everybody gonna be like, it's gonna be much better than the usual dividends that you get from other companies. It's like, hey, this is part of the process. We don't really have to wait for what the company earns and then share that. It's like you buy it, we stake it, we earn it, we share it. You know what I mean? It's straightforward. You don't have to worry about it. And that's where they're betting on. Yeah, so they don't have to wait whether the company makes money or not. Highlights this as investor-friendly and efficient, aligning regulatory clarity with the market access. The launch will not spike Solana's price, potentially the ETF for gradual institutional traction. Favoring VanEck's strategy market, a bill. The experts suggest that VanEck's ETF could lead the increased regulatory appearances on chain staking embodies a new norm for crypto ETFs despite a continual market volatility. For detailed financial and disclosure information, refer to the SEC filings or SEC filings. So basically, since these companies have a lot of power, they can spend extra money to buy lobbies and all that stuff that they need. So basically, hey, for them investing in Solana and Ethereum, all that stuff, and just by holding it, whether the price goes up or down, as long as these assets will not go to zero, like we see in Terra Luna. And one of the reasons why it won't go, I mean, there's always a risk, but by just holding large amount, like 5% of Ethereum, where Bitmain is trying to aim, and Solana, I don't know what the percentage they're trying to hold is. Um, that would kind of give some sort of a trust in the market, so they can just buy it and hold. And also they will earn staking rewards. All right, so the money is day one. They can just stake it day one and earn rewards. All right, thank you, Elena Zenth, for the information. That's the lady who's behind the article. What else we got? What else we got? Let's see. This one isn't about any of the information that we discussed. It just talks about. I don't really like to discuss specific coins because obviously we see where the market's heading, so it don't really matter. But what I really like is how everything around the crypto market is kind of building up. It's like the Clarity framework is working on, and these institutions or whatever you call them are building their holdings on certain coins, and that is what gives the entire market, even though the price is down, but it has to be down for people to trust the market and buy some extra ones. You know what I mean? They can't just increase if it's already 200-300% up. They won't be eager to buy. Let's see, US moves closer to joining global cruise. What is this? This came like, I've seen this article like 2 times. Let's take a look at it, okay? Okay. Ooh, this is bad for the. This is bad for crypto people. If you try to use VPN saying you're in different country, now the IRS could come after you. The Trump administration is taking a major step forward, allowing the IRS to collect any financial data about Americans' foreign crypto accounts. This is bad for you guys. Proposed Treasury rules tied to global tax reporting framework officially arrived in the White House on Friday, where presidential advisors will now review them. If approved, the United States would join dozens of other nations already participating in the Crypto Asset Reporting Framework, or CARF, a system designed to track cross-border digital asset activity and reduce international tax evasions. It's everything they do is about taxes. They need to collect the money. Oh my, what a bunch of greedy people. What CARF is, and why the US is considering it. CARF was developed by the OECD in 2020, or I don't know what that is, okay, for 2022 as a global agreement for crypto tax transparency under the framework. Member nations automatically share information about citizens holding on foreign exchanges. This means if an American taxpayer stores crypto in Singapore, Bahamas, UAE, or any other participating jurisdictions, that information would be reported back to the IRS. So no escaping. Uncle Sam is everywhere with you. Many major economies, including all G7 nations, expect the US have already, except the US, have already committed the CARF. Earlier this year, the White House signed a strong reporting strong support for adopting a system, saying it would help prevent Americans from moving crypto to avoid taxes and bring more fairness and consistency to the digital asset landscape. What? It's crazy. Trump administration advises push for CARF adoption in a major crypto policy reportedly released this summer. President Trump's advisor recommended full CARF adoption, arguing it would strengthen domestic oversight without steering innovation. By also emphasized also okay they also emphasized that any new rules should not add reporting agreements for the DeFi transactions, a key concern for both industry leaders and privacy-focused users. If implemented, CARFs would give the U.S. Regulatory access to foreign exchange data while leaving decentralized platforms outside the rules. That would not happen. Once they get it, they can expand, and they don't even have to worry about whether this is a DeFi or non-DeFi account. Once they passed and they're allowed to do this, it's out of everybody else's hands. Trust me. The Treasury and the IRS have been working on details since the report, and Friday White House review marks the next step, official rulemaking. The White House is reviewing a policy that would let the IRS access Americans' offshore crypto holdings. That would be so bad, man. You can't escape the line. Sorry. Come back and pay us. They need the payment. They gotta be paid. Uncle Sam wants some of the money. Uncle Sam wants the money. Okay, Bitcoin is approaching a death cross. But every death cross in the cycle since 2023 marked a major local bottom instead of deeper breakdown. The current 25 drawdown is milder and shorter than April's slumper. Whatever that was. Was that 30 or 32? Though historically there could still be room for... Why are you playing that? Bitcoin is drifting into the uneasy zone again. The one traders love to fear, where the 50-day moving average starts sliding under the 200, forming the so-called death cross. Funny thing is, despite its gloomy name, every single death cross in this cycle since 2023 singled up almost perfectly with a major local bottom. Now the BTC down roughly 25% from its October peak, nearly $126,000. The bottom seems to be circling back, though nothing ever plays out exactly the same. Everything changes. A bearish signal that keeps acting bullish. Glassnode's latest data shows that short-term average hovering around 110,000 and slowing sinking towards the long-term trend 110,400. So $200 difference. Once that crossover happens, the algorithm crowd will start yelling bearish again. And there's a twist. In all three prior instances, September 2023, August 2024, and April 2025, Bitcoin already bottomed right before the death cross formed. Each time, sentiment was terrible. People were panicking over micro stuff, and yet the chart quietly flipped from red to recovery. Now PTC has flipped, dipped to 94,000, and the market is starting to wander, and it's even lower. To be honest with you, it's somewhere in, where is the market thing? Right now it's like under 92, so it's true. Okay, now we did basically 92, and the market is starting to wonder if the script is going to play out the same as a few um, a few edits. So basically, if it already happened, we could we could see a small dip under it, maybe lasting few hours or a couple of days, 24 hours. But technically, if that was when PTC was 94,000, now it's like under 92,000, give or take around 90,000. We'll see, but if it doesn't hold, then who knows? Maybe everything's different this time. Maybe everything's different. Whenever they say, "Oh no, nothing is different," is everything. I mean, whenever they say, "This time is different," no sirs, no moms, nothing's different. I think unless any of the chains break, right? So if you have Ethereum chain, or which will never break, I mean, I shouldn't say never, but it's very strong and safe chain. But if you have Solanas and your XRBs and um, Cardano will never break. It's very strong. It will never go to zero. Just trust me. That guy is very smart, and he doesn't chase 200 X's. Okay, so that's why the treasury is full of cash. But as long as Solana, which I am afraid because it went crazy last time, it was so undervalued, and they kept buying and pumping that stuff. If it goes down, sometimes it doesn't have, it can be another Terra Luna. That's what I'm saying. But the ETFs that are behind Solana are very strong, and they are very wealthy. They got the money to buy any dip. So unless that happens, and the second thing that can destroy the market completely without any hope is any of the exchange breaks. If you see Coinbase breaking, if you see Binance breaking, if you see Crypto.com breaking, if you see any of those major exchange going out of business, then you're gonna have a disaster. But anything outside of that is manageable territory. Nothing else can. Even if the United States sells the 250,000 or 280,000 Bitcoin it holds, even if the government, which it will not, as long as Trump is the president, he will not drop that. But even if Trump was about to sell the amount of Bitcoin he's got in the treasury, it will not, nothing would happen to it. Okay, because hey, you're talking about 200 something, but compare that to the almost 650,000 Bitcoin that's MicroStrategy had. You know, that guy's glad. He's just bought like almost 800, what is it, $85 million he spent by buying 8,000 Bitcoin. So he will buy it again. All right, so South Korea cryptocurrency exchange a bit, and whatever the other name is strong Q3 profits despite the declining in trading volume due to a weakness in the market and reduction and reduced transaction fee revenue. It's basically what they're saying is, hey, don't worry about it. We got the money. We're still profitable. We're making money for ourselves. And these are the small exchanges. So if the market conditions is this bad and they're still saying, hey, no worries, we making money, that's good, unless they're lying. Abit's profit surged 180,000. I mean, 180%. AIM declining volumes. Despite the volume decline, they're making 108. That's like almost 200%. That's crazy. Abit's operator, whoever that person is, experienced a year-on-year increase of 180% in operation profits of Q3, bringing its 235.3 billion won. Oh, all right, yuan. Is that called won or yuan? I don't even know what Japanese money is called. Despite adding new tokens, trading activities remain limited. The recent fall of Bitcoin by closely 25% the exchange is amplifying the impact of the weekend market profitability. Without regulatory reform, South Korea, oh, it's South Korea. It's South Korea, sorry, it's not Japan. Reform South Korea risks became because South Korea is, I think they have a lot of people who are interested in the market. So by them passing some regulatory framework, like United States already doing, like Japan did. Alaikum salam rahmatullah abdi setabo. Japan did the most impressive one, which reduced the taxation from 55% to 20%, which is really good. Which means everything else, you trade in the market regardless of what you're trading. Now you're paying the same as if you hold in crypto, so it's not treated differently. And that's what you want to see. You want to see these regulations passing. You want to see these giant companies putting ETFs. When they put ETFs, that means people who have got no idea. They don't want to use the phone. They don't want to go to exchange. They don't want to buy it. Those people can buy it through their for whatever 401k savings or whatever they have. Okay, let's see what else came. Let's see. Welcome Khalid. Welcome Qul Mahdumar. Dhammaantiin soo dhawaada mahadsanidin. Tap the screen if you're here. The screen taabta. Aad ku hurdaan bahalkee. Okay. We read this. Is this the same one we read, or are they adding something else to it? I should not do that. I'm afraid this is the one I read. Okay, I will understand when I read it again. Okay, so because I'm moving on whenever if I read or not. It looks like the same one that I read. The Clarity Act. Is this the Clarity? Okay, let's read it. Let's read it again. Yeah, I read it. CFTC. Yep. A newly introduced Senate bill is aimed to deliver something into crypto industry demand for years, a clear legal definition of which digital assets are security. Oh no, maybe it's a different twist. Securities and which are commodities among the form of with a formal decision or division of regulations authority between the SEC and the CFTC. If passed, the legislation could become the most consequential U.S. crypto policy framework to date, potentially ending the years of regulatory uncertainty courtroom battles and conflicts interpretation across agencies. And remember, VanEck, wasn't VanEck, was it VanEck? Yeah, VanEck just today released, started the VSOL trading on Nasdaq. Was it? I think it was Nasdaq. I'm not sure it was, but they just started November 17th, which is today. So basically, they knew this bill will come out. That's allowing them to do that. What the bill focuses on, the proposed seeks to establish a highlight rules identifying with a when a crypto asset falls under means go to zero. When those certain ones go to zero, that's when what to do, like how the courts and the ETFs and the holders, the process how to legitimately go find you whatever your money was in. You know what I mean? Because people are going to lose a lot of money. And once you say, hey, this is an ETF, well, that means every American can go ahead and invest in it, they need a way to make sure the investment is safe. The goal is to create consistent treatment of tokens across exchanges, trading platforms, custody services, and public companies, something industry leaders argue is essential for the institutional adoption. The word is institutional because up to right now, the number of institutional investors into the crypto market is very limited. So these are the regulations which will encourage them to put their money into the market. The Security and Exchange Commission focus points security markets, stocks, bonds, security-based digital assets, which right now they kind of separating cryptos in, okay, they're security cryptos or what they call digital assets, and also they're saying, oh, non-securities. Now, how we gonna deal with them is gonna be like normal, right? Mandate investor protection, enforcement of security laws, and maintenance of fair and efficient markets. Regulatory tools, disclosures, registration, enforcement actions, and investor protection. And what else is in it? Supervision, stock exchanges, and the advisor, broker, public companies. So whatever, those are the things that the SEC or the Security and Exchange Commissions will do. That's their job inside the bill. Now, CFTC or Commodity Futures Trading Commission is another institution that will also is part of. What will they do? The focus point is commodity market, derivatives, futures, swaps, commodity-linked digital assets. So now, this is where the issue is. Like they said, oh, Bitcoin, Ethereum, Solana, and few blue chip cryptocurrencies cannot be treated as securities, which means they will not go under the Security Exchange and Commission Exchange, whatever that is, SEC, but they will fall under the CFTC, Commodity Futures Trading Commission. Why? Because those have to be commodity. They're commodity markets, so they have to be mandated under this. Prevent frauds, manipulations, and abusive practices in derivatives and commodity market. So basically insider trading and all that stuff. Regulatory tools, oversight of derivatives clearing, surveillance, anti-manipulation enforcement. They also do supervision with future exchanges, derivative platforms, and clearinghouse, whatever that is. Key laws, Commodity Exchange Act, and Dodd-Frank provisions. Why this matters for crypto? Okay. for over a decade, which is around 10 years since the crypto started, the U.S. Crypto firms have forced a regulatory landscape where the same token could be considered security by one agency and commodity by another. So these two agencies, one will say, "Oh no, Bitcoin and Ethereum and Solana, these are all commodities. They're not securities." And then the SEC will come and say, "No, no, 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 no. These are securities. They have to go under the security, whatever that is, the SEC." So over 10 years they were fighting. There wasn't any clear which one is which and all of that stuff. So then what happens? A formal legislative framework would, what is it going to do? Prevent and unfilled legal standings for token clarifications, clarify obligations for exchanges and users, reduce litigation risk, encourage institution participation. So then when everything is clear, you know what you're buying, maybe a lot of institutions will be encouraged to buy. Strengthen U.S. competitiveness in global digital assets market. As the industry waits for the final Senate debate, this bill represents a clear effort to establish a coherent bipartisan regulatory foundation and potentially unlocking a new era for crypto market growth once legal uncertainty is resolved. Maybe it's one of the reasons why we see in all this, like people who buy their cryptos elsewhere are realizing once this bill is passed and other bills are passed, and the way is clear for institutions to buy, now they can buy cheaper ones to start with, because now everything is down 30%, 40%, 50%. Secondly, they can buy as institutions instead of individuals hiding their identity. And yeah, so that's when you hear, people calling for $220,000 Bitcoin, all that stuff. These are the bills it needs to go through first. You have to know if the security, they're gonna run away from it. Do I need to be get out of? Yeah, I need to get out of here soon. Okay, so let's see. What is CPO? Is this a company? Let's find out. Because this article has to do with this company and I don't know what it is. Analyst with CPO. What is it? What is it? That's what I'm asking. What is it? Not what it does. Okay. So it is global markets. It's a American financial exchange operator headquartered in Chicago, CPO. CPO to launch first U.S. regulated continuous features for Bitcoin and Ethereum on December 15th. Remember, December 1st, the quantitative tightening is gonna stop. So the government may print some money. That's what Trump is talking about. Oh, he's gonna send $2,000 checks to every U.S. taxpayer. That's when all of this comes into. Cboe Global Markets has unveiled one of the most significant institutional crypto development of the year, the launch of Cboe Bitcoin Continuous Futures, or PBT, whatever that is. The Cboe Ether Continuous Futures on December 15th, pending regulatory review. The product will trade on the Cboe Futures Exchange and market the first time U.S. investor gain access to perpetual style crypto features in fully regulated domestic market. SIBO's new contract introduced a long-awaited structure for institutional traders, 10 years feature with daily cash adjustments designed to mimic the perpetual feature widely traded on offshore exchanges but without the need to roll positions every month. Key features: 10-year expiration at listing, daily cash adjustments to maintain price alignment, cash settlement, no physical delivery, central cleared through CPO Clear US, and complaint with CFTC merging and risk rules compliant, not complaint. What is going in my head? This hybrid model gives the investors perpetual exposure. Ugh, I'm not gonna try it, okay? Ex whatever it is. Traditional features market protection, addressing a major gap in exposure. I can't say it, okay? I'm not gonna try again. Addressing a major gap in the U.S. Derivatives landscape. Why this matters? Perpetual futures dominate crypto trading global, but have historically been available only through offshore revenues. And remember how important these steps are. These are all connecting. It's all connected. Remember the article, 2 articles ago, we read how the Trump might join an institution that's built on reporting citizens of nations holding accounts in other offshore accounts in other countries. So let's say if you're a U.S. citizen and you have an account in, let's say, Dubai, and then that's where you hold your crypto. Now, the article we read, Trump wants the IRS to go after that individual and make sure that he reports and pay the taxes on that crypto. Why are they putting all this in place? Is one of the reasons is they legalizing these tradings and features in the United States, and they want you to put your money in the United States and pay the taxes once you realized the your crypto profits, right? So all of this ties again. I mean, the Clarity Act is coming up. The bill is going to be signed. Now we know what cryptos are going to be commodities, what cryptos are going to be uh, uh, whatever else we read over there, securities, and then the securities will go under the SEC and SF, whatever that, I'm not gonna even, CFTC will take the commodities. Okay, and then you have banks or the institutions that are also launching the futures market starting December 15th, and that's really important because they're trying to push everything to be cleared before December 15th. Remember, hopefully, we'll get rate cut. Secondly, I hope we also get the quantitative tightening, quantitative easing starting December 1st. And let's hope that this bill clears. Let's hope Trump runs the $2,000 on every American. All of those would be a catalyst for markets to go up, especially the risk assets. Kiyako rates will power the contracts. Okay, the PBT, which we read, and the PET contracts will use the Kipao, whatever that is, real-time rates, allowing price to reflect high-quality aggregated market data. Anna Clear Marie, whoever that is, Akio highlighted that the offering meets a real institution need for long-term exposure without operational friction. The risk management and clearing. All contracts will be clear through CPOW Clear US, reducing counterpart risk and enabling cross merging with the CFE products. What is the CFE? Okay, yeah, they're called the CFE. Okay, that is interesting. That is interesting. That's why I like reading all these articles because it gives you a overview of what's going on. Okay, so interesting thing is we know PayPal has a stable coin supply, stable coin. They call it PYUSD because it's much easier to. A lot of people use it basically, and now they're saying it's skyrocketing. Means a lot of cash in the market. The PYUSD, the USDT, USD. I mean, the only green in the market right now is the stable coin. PayPal's PYUSD continues to climb the stablecoin ranks, adding another 22% on the market capitalization over the past 7 days. PYUSD leads the stablecoin space in growing over the last week, with $625 million of PYUSD minted since November 10th. So 7 days in that much, that's a lot of money. It ranks the third position in positive stablecoin growth over the last month, trailing Tether. Obviously, nobody can beat Tether. I mean, for now. The newly minted PYUSD made on its way into Ethereum, bringing a total supply on Ethereum to up to $2.3 billion, accounting for almost 70% of the total PYUSD. So basically, what they're telling you is like almost the entire amount of PYUSD that's already minted is minted on the Ethereum chain. The charm comes just 1 month after Paxos, which issues PYUSD, accidentally minted 300 trillion worth of USD on Ethereum, which was promptly banned after and the incident following last week's champ. The PYUSD is now the sixth largest stablecoin in decentralized finance or DeFi. It accounts for just over 1% of the total 300 billion stablecoin market, which is largely dominated by the USDT or Tether, with over 183 billion market capitalization and USDC of 78 billion evaluation. 1 inch. Okay, so basically that's what we could find. That's interesting. That means a lot of cash is in the market. Where is that cash going to go? We don't know. Is it gonna flow out of crypto or is it gonna stay in crypto? We don't know. Okay. So we see Ethereum falling 4-month low, prices under $3,000. We see everyone who bought Bitcoin for the past year is underwater, which means red, unless they buy it today or since the Bitcoin was on over 90,000. By the price of 92,000, everyone who bought it uh, since, I don't know, April, May, June, is in red, basically. All right. That's all. That's all we have today. We got nothing else. No new articles. We read most of it this morning, and now we covered the rest. Until I have something else that's interesting for you guys. Appreciate you guys. Please, if you're watching me on TikTok, check my profile. There's a YouTube link. Please go ahead and subscribe my YouTube over there. Watch cover videos. I'm trying to reach 4,000 hours over there. Other than that, I got nothing else. Let's hope the market picks up. It's three. We already 3 trillion and 90. What is it? What percentage? Ah, man, I love these markets. Dominance is what? Where is it at? I can't see the dominance. Anyways, but it should be above 60% by this time, because 1.8 trillion dollars of the $3 trillion is in Bitcoin. So, all right, I'll see you guys. Thank you so much for coming. Ooh, Ahmed came. Ahmed, thank you, my brother. Thank you. Thank you. Thank you. Unfortunately, I just have to get out of here now. I can't. I'm so sorry, brother. I end this live right now, but I appreciate you guys for coming. Thank you so much. Thank you, everyone who came. Appreciate you guys. Okay. Until I have something interesting to tell you guys. That's what the market is. Okay. Be blessed, inshallah. Assalamu alaikum.